Welcome to TradeTheNBI.com. This is John. This report is for October the 2nd. Well, there you have it. We started September right over here. And from that time, we've seen just a small consolidation, but this slow rise that has sort of been a trademark of our expectations, given that we were seeing parallels to the mid-90s rallies that slow consolidation that then rose to peak levels. We had a few little warning signs that popped up, like in particular right about here, and we saw some weakness that took us down to the green ABM, but plenty of support there as we started to get resets from short-term as well as the mid-term buyers here on the DOC. And short-term buyers from there started to increase as well as mid-term, and we even got a turn up in the long-term buyers, and that all took place right about here as we started to press, and then we got the crossovers, and it started to take off quite quickly as shorts covered dramatically in this, and then discussion about the GDP growth, and this was always the question, were we going to be moving from slow to no growth policies, which is what things had been for the entire duration of the Obama years, and clearly, despite the Fed increasing, which turned out to be probably right in line with where things were actually going, that they haven't overdone it has probably been the help. If they'd done it additional hikes sooner, probably could have thwarted some of this. We didn't get any of the legislative relief that was expected, and that has obviously limited the movement, because if that starts to take place, 3,000 for the S&P is not out of the question here at all. We saw the reset with the shakeout here as it started to turn around. Now the question will be, are we going to see a continuation? This needs to continue rising to get back up above the levels. We do also have the dip below the red line, so any retrace is likely to bring us right back to this ABM green level. That 2485 range is typically what I had as was a resistance and then a support area, and we've rallied since that particular point. And we were talking about getting to 25 range once we got over the 25 number, and we're right in line with that. So projections from way back seem to be holding up. Now the NQ seriously underperforming. I think some of that has to do with the struggles that Apple is having with their latest release, because it dominates the NASDAQ, as well as some of the other techs have struggled. But you got a much cleaner buying setup here from the DOC with the orange dipping below that we didn't get from the daily, at least on the ES. The euro maintaining this level is definitely going to keep the market rising, because this really supports S&P companies that deal with European sales in that. And if you follow my lines from way back over here, that 115 range to somewhere right in this 108 is where I'm projecting should actually be from a normalized standpoint. The fact that they're elevated to that just bolsters U.S. markets. Bonds on this particular decline there, with the likelihood that rates will increase potentially as early as December. I know they're not seeing the inflation numbers they expect, but I thought that was always a red herring anyway, because the real question on inflation was how much labor slack existed, and that really was a question. As long as oil isn't out of control, which is really not, this is very modest. It's a decent level for both production values, and I think that's going to just further be a catalyst. And the fact that we're seeing greater demand is really what the key was to determine whether the economy was really taking off, and starting to indicate that some of these changes in policy are having an impact on that. And will tax reform get through? If it does, that's really going to turn the corner and cause a significant amount of movement. We talked about the retrace in gold needing to fill back in the positive extremes, and the lowest area right here was this dip to retest right in the 119 range here on GLD at least. Still has a little more room, but that definitely becomes an opportunity, because when inflation does kick in, it's going to take off. And so from a 5K standpoint, Saw some little bit of intraday weakness as we came right in through here, and all that did was rebound to the ABM green level, dropped below, and then came right back up with the new buy signal that set up, and then boom, it just took off from there, and it was just a clean run. Really didn't involve much effort at that point. Only right here when we finally got a DOC spread with the cyan coming above to capture just a little bit of weakness, but it happened with short-term buyers completely being reset and then spiking back up, and that just turned it around. Didn't even get to the ABM green on that signal, and you'll notice the shakeout never even got close to dipping to negative, which is really strong in that particular area. So what are we looking for going forward? Well, that's the big key. I think that you're probably going to see continuation. I'm looking for that 25 level. I think that will be another test point. But overall, any corrections that we're likely to see are going to be modest and still fit within that general up with very soft returns. And I know this defies a lot of the conventional wisdom at this particular point because they think things are crazy, but you're pricing in the future inflation of the market and basically the devaluation of the U.S. currency because of the low rates. And so if rates start to rise, then I think you might see the market correct a little bit, and that certainly would be more in line with drawing investment towards treasuries than it would be towards equities. But at this particular point, as I've been saying for how many years now, I know it gets old listening to it, but there's nowhere else to put your money for returns, and so it's forced equities to be that spot, and that's just the way it is, and you just have to go with that for now. So as always, though, continue to trade well and follow the indicator readings because it's been spot on, and we're going to continue to be. So we'll talk again later.